What's up, everybody, and welcome to Killing the Investing Game, and welcome to this edition of Stock Market 101. Today we are covering earnings per share, otherwise known as EPS. So EPS represents how profitable a company is based on how many shares it has outstanding. So EPS is calculated by taking the net profit minus any dividends divided by the total shares outstanding of a given company. So, for example, we have Apple here. They have, as you can see, $57.41 billion in net profit for 2020. They have a small dividend of about 0.68%, but for the case of this example, we're going to kind of ignore that for total numbers. And as you can see here, they have 17.1 billion shares outstanding. And if you divide that up, you'll get about $3.35. You can see that that's pretty close here as an EPS, which is pretty good. So the most common metric reported when companies do report earnings is the EPS, and then probably second to that would be total revenues. So a top line, bottom line, we want to see net revenues as a bottom line beat, revenues continue to grow, and then that EPS continue to grow. So as long as the revenue is growing and the net revenue is also growing, EPS is growing quarter over quarter, year over year, then we're in a good place. So one quick sidebar, shares outstanding is total shares, whereas the free float is actually the shares that are available on the market. So shares outstanding is going to include shares that are owned by insiders within the company and any sort of institutions that are not actually a part of the free float. So the free float is going to be the shares that are actually available on the market to be bought and sold. One quick sidebar as well about EPS is the difference between GAAP and non-GAAP. You'll see this GAAP versus non-GAAP. So GAAP is going to be straight to the fundamentals, straight to the earnings, top and bottom line. Non-GAAP is going to include things like dilution, acquisitions, restructuring, one-time purchases, any sort of one-time expenses that the company had. So they can kind of bolster their EPS. Usually the non-GAAP tends to look a little bit sweeter than the GAAP EPS. So just be careful with that. So again, in general, we are looking for a positive EPS. Means that the company is profitable, and we want to compare that to previous EPS to see a good timeline of growth. So thanks again, and that is earnings per share.